Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, the Trump presidential victory caused an overnight spike in the price of gold, which almost vanished in the morning after the market meltdown predicted overnight index futures activity failed to materialize. Yet prices for base metals such as copper, nickel, and zinc, which started trending up last week, continued to inch higher. Most of our Discovery Watch juniors have drifted sideways or lower during the past few weeks. One of them, Kenex Mines, has moved up since you introduced it on October 21st. Is this related to better base metal prices or fundamental developments at Kenex?
Well, it was interesting to watch Donald Trump speak last night when it was clear that he was winning the American presidency. Gone was all the hyperbolic, nasty bluster where he says despicable things about women, about obese people, about Hispanics, and all these other things which made one really sort of wonder how could this man possibly end up leading a nation which, despite his claim that it is no longer great, is still the greatest nation in terms of GDP and military power and social cultural influence around the world. One of the things that he did bring up was infrastructure spending, which is a theme that is common with the Democrats who wanted to have infrastructure spending boosted during the last 8 years as a way of using fiscal stimulus to dig the American economy out of the hole created by the Bush administration's financial crisis. Republicans, which are now dominated by the so-called Freedom Caucus, which is the Tea Party renamed, is very much against any sort of fiscal stimulus. They have blocked the Democrats. And now the question is, with this new president saying, well, yes, infrastructure renewal is what America needs, especially if we are going to bring industry and manufacturing back from overseas. We're going to, shut down globalized trade and have America be a producer of things, not just a consumer of things. But the House and Senate went to the Republicans. So why would they change their tune about being against fiscal stimulus for infrastructure? One of the scenarios that's likely to come out of this is that Democrats and moderate Republicans are going to coalesce and form a new voting bloc that isolates the far left and the far right. We may even see a three-party system emerge after this election, which was really a disaster for both the Republican and the Democrat parties. So there is a realistic prospect that Trump can get the go-ahead for infrastructure renewal, provided he leaves alone all these other divisive things such as building walls with Mexico and so on. Now, that could explain why the base metal prices have continued to inch higher, and gold, which retreated, people saying, well, maybe this man is going to be a sane person and not tip the world into a complete geopolitical conflict. However, the other reason that base metal prices could be going up is that Trump will indeed be a bull in a china shop and unleash geopolitical conflicts everywhere. It'll be several months before he gets a chance to demonstrate his policies. During that period, Russia and probably China will continue to push the envelope to see what a lame duck president will do about it. And if we do end up with this type of envelope pushing over the South China Sea and so on, we could see a disruption of metal supply from various parts of the world. And that could increase the price of the metals simply as a result of, declining supply. All of a sudden nothing's coming out of the Congo anymore. Well, that's 50% of cobalt and a good percentage of copper. If we get both of these things happen, that the United States retreats into itself, starts doing infrastructure renewal, and we see external supplies getting disrupted, we could be in a bull market for base metals or general metals in general that would be very beneficial for companies such as Kenex Mines, which is pursuing polymetallic deposit in the Flin Flon area of Manitoba.
Well, that makes sense going forward, but Kenex has performed better than other juniors with polymetallic discovery plays. Is there a company or project-specific reason for Kenex to be outperforming?
Well, when we talked about Kenex on October 21st, when I introduced it as a Discovery Watch junior, they had just published a very good, perhaps the best intersection for that project in the Pine Bay system. And this attracted the attention of Rick Rule's Sprott company, and the company has been able to raise $5 million at 50 cents to fund a 10,000-meter drill program, which is now underway. And this drill program involves drilling a series of parent holes from which they can then wedge off into different directions all the way down to like 300 meter depth to probe for the on-strike and down-dip extensions of this system. And if you recall from a couple of weeks ago, Placer Dome had chased this system and thought that it was truncated, that it didn't exist. And this drill hole that they pulled a few weeks ago, it put the potential for a meaningfully large system back into focus. So the market is excited that, okay, we've got money in the bank, we've got the metal prices trending higher, and we could start seeing this blossom into a significant VMS base metals discovery with a gold-silver kicker.
Goldquest Mining is another Discovery Watch junior which reported exploration results last week. Is there any good news there?
Well, the news was not good. As you recall, they are drilling about 20 IP anomalies in the southern part of their Romero project in the Dominican Republic. In late September, they published a pre-feasibility study for the Romero deposit itself, which is a copper-gold system. And that's sort of the big optionality upside play. Now they have embarked on a program where they will still be doing for probably the next 12 months, testing all these targets to the south that resemble the Romero target in terms of like representing a potential sulfide system. Well, drilling on target A did deliver anomalous copper-gold values, but nothing comparable to what the Romero delivered. So it's a bit of a head-scratcher. It looks like the Romero anomaly. However, a geophysical anomaly typically just reveals the sulfides. It does not tell you if there are commercial metals such as copper and gold within that. So they drilled 6 holes into this. They've now moved on to target B, and they've got many more targets to go. Remember, exploration is a statistics game, and the Trump victory and his pounding of the table for infrastructure spending, despite possible opposition from the House and Senate, copper today was at 245 after spending much of the year languishing between 2 and 220. So the Romero deposit potentially benefits from higher copper prices, and of course Trump hasn't had a chance yet to really cause any disturbances on the global stage. So gold still has lots of opportunity for upside movements in case the policies he enacts becomes destabilizing for the world.
What about nickel? Do you have any favorite nickel juniors for Discovery Watch?
Well, a favorite of mine that has been a spec value hunter recommendation, and one that I also personally own, is First Point Minerals, which about 5 years ago discovered that a very low-grade system in central British Columbia called Dakar could potentially be commercially mined, even though the grade is like 0.1, 0.15% nickel. Now, the reason this deposit could be commercial is because the nickel is in a mineral form called awaruite, which is essentially natural stainless steel, an alloy of iron and nickel. And there are no sulfides in this system. Grinding and then gravity and magnetic separation can liberate this nickel grade at a fairly low cost. It is not highly energy or chemical intensive. And Cliffs for a while had it under option, spent $20 million on it. Then they were taken over by a hedge fund group that was unhappy that iron prices collapsed and Cliffs was found offside. Cliffs recently sold the deposit or at 60% interest back to First Point Minerals. First Point Minerals has it on a care and maintenance basis at the moment. It's an optionality play. But what's happening in the Philippines, which has been mining nickel laterite ore and direct shipping it to China, with the new president, Rodrigo Duterte, and his minister, who is a bit of an environmentalist, there is a crackdown coming on this very wasteful, polluting mining activity in the Philippines, and that could shut down the flood of this nickel pig iron style nickel coming from the Philippines. Plus, if Russia starts pushing the envelope in Eastern Europe and we end up in a conflict with them, the nickel supply coming out of Norilsk, which is a world-class nickel mine, that could also come offline, and that would also have a positive impact on the nickel price. So although the First Point deposit is not economic at $5.15 nickel where it is now, if you get nickel into the $6 to $8 range, it starts becoming very interesting. The company's a bit of a bottom fish at the moment because they are not spending money, but they could attract a farm-in partner, a consumer of nickel that will put up the capital to push this forward. So this is one way. It's an old discovery, but it's waiting to be rediscovered by the nickel consumers out there as a long-term supply of nickel in a secure jurisdiction with a fairly stable cost structure.
Discovery Watch with John Kaiser will be right back after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back to Discovery Watch with John Kaiser. I'm Jim Goddard. A few weeks ago, you talked about Clean Tech Holdings and its nickel cobalt optionality project in New South Wales, Australia. Have there been any developments on that front?
Well, after we talked about it and discussed the nickel cobalt optionality play with the Scandium byproduct and the company's strategy of getting the New South Wales government to grant a modification on the development consent that the bigger nickel copper project got in 2005. The stock, which had been up there 50 cents plus, retreated as low as 32 cents and has then since bounced back. And the lower price enabled the company to do a $15 million financing at 39 cents to fund ongoing feasibility demonstration work for the nickel cobalt scenario. They've already published a feasibility study for the Syerston Scandium standalone project, and this is what I believe they really want to put into production because it'll only take $100 million to develop that. It'll spend a lot of cash flow if it performs as predicted by the feasibility study, and its technology is a key part of the big nickel cobalt scenario, and it would actually function as a pilot plant study for the bigger nickel cobalt scenario. But we are still waiting for the modification to development consent, which would then allow Friedland to push forward with the Syerston Scandium standalone operation to get a mining license, which would enable him to build this operation and produce a primary scalable scandium mine. But the focus now seems to have shifted to pushing the nickel-cobalt optionality play forward, and cobalt prices have been rising in the past couple of weeks. The situation in Congo continues to deteriorate, and we may see a substantial cobalt spike in the next 2 to 3 months if Congo breaks down into civil war, and many of these copper cobalt mines end up getting shut down in terms of their ability to supply the world with cobalt.
If clean tech is not the best vehicle for investors looking for a primary Scandium play, what should they be watching?
Well, my favorite that I personally own, and which has been a Spec Value Hunter recommendation for my readers for the past few years, is Scandium Mining International Corp. And they produced a feasibility study for the Ningen deposit, also in New South Wales, about 150 kilometers south of Cleantech Syerston deposit. This project had an environmental impact statement submitted last May. The company has been working with the permitting bodies to try and get a development consent. Once they have a development consent, they think it would only take a couple more months to get the mining lease, which is the key document needed to go and start building the project. So they guided earlier in the year that they would have the mining lease by the end of the year. We have not yet seen the development consent. The end of the year is approaching. They still seem to be optimistic about it. So this company's in a holding pattern right now, waiting for news that they have the green light to file for their mining lease. And once they have the mining lease, that triggers a 30-day window for the 20% partner to decide whether they'll fund their 20% alone or convert it into an equity position in the company. And at that point, and this will probably be in the first quarter of next year, the company will be looking for $100 million equity financing. I've crunched the numbers. Even if they did a financing at 10 cents, which would be extremely dilutionary, the stock still has substantial upside to it. And I believe this stock will end up being in a 40-60 cent range in the wake of getting a mining lease and the green light to go and build this thing, because the numbers are so interesting. And aluminum scandium, regardless of what path that Donald Trump chooses, even if he chooses to shut down alternative energy projects and focus on internal combustion engine, gasoline-fueled engines, his other policies will likely cause supply disruptions in places like the Middle East. We will see significantly higher oil prices, which would be good for the American oil industry. But for anything that moves, reducing the weight of the car, the plane, the train, the boat, that will become a top priority. And of course, it is a top priority if you're going to be using alternative fuels such as electricity, and aluminum scandium makes this all much more possible than existing alloys. So it's a metal whose future is bright, regardless of the different paths that the Trump administration will end up taking.
John, thanks for the update.
Thank you, Jim.
We've been talking with John Kaiser from KaiserResearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.